Everyone, welcome back to the channel. Jared White here with White Ridge Mortgage, and today we're going to be discussing monoline lenders and how they might be the better choice for you, especially if you're a first-time homebuyer. So the first thing I want to get into and clear the air about is what actually is a monoline lender. You've probably never ever heard that word before in your entire life, and essentially all you need to think about is it's a mortgage lender that specializes in mortgages, meaning they're massive mortgage finance companies and they're quite heavily regulated, just like major banks. However, they don't offer checking accounts, savings accounts, credit cards, line of credits. They are solely responsible for lending money out for mortgages. And some of these monoline lenders actually lend out more in mortgages than most major banks. Now, the main reason why I'm making this video is most of you guys out there, especially you first-time homebuyers, you are so focused on getting the very best rate. But what you really need to be focusing on is the penalty if you were ever to need to get out of that mortgage. These penalties can be thousands of dollars, and in the case of going with most major banks, they could be tens of thousands of dollars. And that is one huge separating factor between a monoline lender and a major bank, is how much their penalty is going to be if you wanted to leave them before the end of your term. Now, these penalties are something that a lot of first-time homebuyers don't really think about whatsoever, and it's something that can't be overlooked. It's going to be the most expensive cost you incur throughout the entire life of your mortgage, and believe me, everyone triggers a penalty. I even did, and I am working in the industry. I thought for sure I was going to be at my last place for at least the term that I chose. Sure enough, I broke it and I paid $8,000 as a penalty, whereas if I was with a major bank, my penalty would have been $27,000. So in this video, we're going to discuss why monoline lenders are actually the better choice when it comes to getting an insured mortgage, which means you're putting less than 20% down, and for younger buyers due to the fact that your life is changing so much in the coming years. So you might be thinking, well, why do I want to worry about a penalty? I'm only going to be in that mortgage for 5 years. Think about what your life looked like 5 years ago. I know for me, my life has changed so much in the last 5 years. 5 years ago, I was a Red Seal automotive painter. Now, fast forward 5 years, I am one of the top brokers across Canada, and I didn't even know what a mortgage broker was at that time. Now, the reason why this is so important for first-time homebuyers to understand is your life is going to change a lot in the next couple of years. You don't know, you could be getting into a relationship. You could be starting a family. You could move for work. There's so many different things that could potentially change because there's so much else going on in your life when it comes to your career and your relationships. Therefore, it's so important to have the flexibility to know that you're not going to get absolutely raked over the coals when you have to break that mortgage. Now, the first thing I want to discuss is how the major banks actually calculate their fixed rate mortgage penalty. It's called an IRD calculation. It stands for Interest Rate Differential. This is the difference in interest rate between the one you have and rates on the market. But here's where it gets tricky because every lender does their calculation different, and major banks, CIBC, BMO, RBC, TD, and Scotia, the big five, they use their posted rates for this calculation. Now, I know you're not sure what a posted rate is yet, but if you were to go on any bank's website right now and look at what their posted rates are, I guarantee you'll see they're either a percent or sometimes even 2% higher than the rates on the market right now. This is where they get you because at the end of the day, when they do their IRD calculation, they're not going based off the rate you have on your contract, which is heavily discounted, and the rates on the market. They're taking the difference between their posted rate, which was super inflated compared to the rates on the market. And that's where you see the massive difference in thousands of dollars for a penalty or tens of thousands of dollars for a penalty. So to give you an example, let's say you got a mortgage with Scotiabank and your mortgage rate is 3%, but at the time of getting that mortgage, the posted rates were 5%. Now, rates on the market are 2%, and you decide, hey, I want to refinance to lower my bills or pay less in interest, or maybe you have to refinance or you have to sell because your job relocates. You're not just paying the difference in interest between 3% and 2%, you're paying the difference between 5% and 2%. Now, here's where the monoline lenders come in. They have a much fairer penalty calculation, in my opinion, and the reason why is they take the difference in interest rate between what you actually have on your contract and the current rates on the market. And due to this simple policy difference, if you were to have a $300,000 mortgage and you were to break that mortgage and you were with a major bank, you're likely going to be paying around $8,000 to $10,000 for your penalty, whereas with a monoline lender, you'd be at about $2,000 to $3,000. That is a huge difference, and it's something that you really can't overlook. Now, let's bring up the whole rate conversation. I know it's important to have the best rate. Don't get me wrong, rate is one of the most important things, if not the most important thing, but you also have to add other aspects into the equation to make sure you're still getting the best mortgage overall. And penalty is pretty much right on par with rate when it comes to how important it is. But as for rate, monoline lenders are typically very competitive with their rate. The reason why is they don't have some of the same services that a major bank does. You can't walk into a branch location with a monoline lender. They simply just don't have that infrastructure yet. But with that being said, they all have very, very user-friendly, amazingly beautiful online portals where you can check your mortgage balance, you can use your prepayment privileges. And the nice thing is, with most major banks, you have to typically set up a bank account with them in order to get offered their best products. Whereas with a monoline lender, they don't want to set up a banking account for you. In fact, they can't even set up a banking account for you because they don't do banking. They do mortgages and mortgages only. So that means your situation isn't going to change at all. Your banking doesn't have to move. The mortgage payment is simply going to be made through a pre-authorized debit from your normal bank account. When it comes to insured mortgages with less than 20% down, the product with the major banks aren't really that amazing anyways. You see, with a monoline lender, you're getting a mortgage at a good cost with very flexible terms when it comes to penalties. Now, with a major bank, you're typically getting a mortgage, but sometimes they have a home equity line of credit built in, or they have other little key features that are what makes that product stand out. And I'm not saying major banks are a bad choice. Especially if you're putting more than 20% down, I would argue that they're a much better choice because you can have access to the home equity line of credit. You can have access to different programs such as high net worth programs and stuff like that. But when it comes to putting less than 20% down and you're getting an insured mortgage, you can't access any of that stuff anyways because the insurer that's approving your file would not allow it. Therefore, most products on the insured side are pretty black and white. You have an interest rate, you have amortization, you have a term, you have a penalty amount you pay, and you have a prepayment privilege on how much you can pay down the mortgage if you wanted to every single year. Aside from that, there's no crazy features like a re-advanceable line of credit or having these high net worth programs to qualify or business for self programs that doesn't exist on the insured side. Just comparing apples to apples, you might as well choose the one that has a very competitive interest rate, but a substantially lower penalty. The very last thing I want to mention is that another key benefit of going with these monoline lenders is they are very quick. So if you have a subject to financing period on your purchase of maybe 3 to 5 days, you can almost guarantee that you will get an approval in that time frame. So you can move forward with your purchase by removing those subjects stress-free. And for some people, and I know for myself as a broker, that's a much better situation to be in when we can tell you prior to your subject removal that everything's good to go, you have nothing to worry about, and you're fully approved. So there you have it. I really hope this video does at least make you think a little bit more when it comes to choosing a mortgage product instead of just blindly walking towards whatever has the lowest rates. Because at the end of the day, my job as a mortgage broker is to try to save you the most amount of money overall. My job is not to get you the best rate, it's to save you the most amount of money overall. And sometimes getting the best rate is part of that. Other times, it's making sure you're going into a product that has very flexible terms and can account for the changes in your lifestyle over the next couple of years. If you're in need of some mortgage services, you want a broker to ask some questions to, or you need to get pre-approved, there will be a link in the description to book a call. We're more than happy to help. We work in the BC area. We can work in Alberta and Ontario as well. So if that interests you, please go ahead and do that as well. Thanks a lot for watching. Have a great day.